everyone, and welcome to today's webinar, Putting It First. We're so glad to have you all with us, and I want to go through just a few logistics before introducing our speaker. We will be recording the session and we'll send out an email with access to the video so you can refer back to this great content as needed. Also, we have enabled the question feature for you all. So if you look on the right-hand side of your GoToWebinar panel, you should see a questions tab where you can write in your questions at any time. We'll answer some as we go, and we'll have time for any that we don't get to at the end during our Q&A session. And in fact, to give it a go and make sure you feel comfortable with it, if you want to go ahead and type in your name and where you're tuning in from so we can see who all is joining us today, that's always fun. So again, that's in your questions tab on the right-hand side. So I'm Hannah Curtis. I'm a coordinator with the North Metro SBDC, and I'm so happy to introduce Lauren Kmetz, founder of Antora CPA and a North Metro SBDC financial consultant. Lauren will be presenting on this idea of putting profits first, something I'm sure we are all needing to hear about. So thank you so much for taking the time to be here, Lauren. I'll turn it over to you now.
All right, thanks, Hannah. So I'm Lauren Kmetz. I'm the owner of Antora CPA. I'm located here in Westminster, and I do remote tax preparation and accounting services, bookkeeping, all that fun stuff that no one really wants to do but has to do. I'm really excited to be here with you all tonight, and we're going to be talking a little bit about traditional accounting and its flaws to an extent. We're going to look at some different ways to look at reports and how you can kind of create a business budget for yourself. And so I have to start with the legal disclaimer here that this is only for educational purposes. This is not any legal or tax advice, so be sure to seek personalized guidance from an attorney or an accountant to make sure that the advice is specific to you. So who am I? I am a proud Colorado native. I'm a CSU grad. I got a little picture of a ram here. I went to CU Denver for my master's in accounting. I love to travel and spend time in the mountains. I named my business after a Colorado mountain. So here's some pictures of me playing in the Colorado mountains. Here's a picture in Spain. So by trade, I am a tax accountant. That's what I do kind of day in, day out. And believe it or not, I do enjoy it. And I am a personal finance nerd. That's almost my hobby that I've gotten to integrate into my career. And what I see so many businesses struggle with in terms of their accounting and finance is that they lack the personal finance knowledge, these kind of basic foundational concepts that none of us really learn in school. So how to manage your grocery costs, how to pay off debt, how to save for retirement, these kinds of things aren't taught in school. And I get to help bridge the gap of, small business owners from this education that they didn't receive and now transitioning to adulthood or running a business and integrating those skills. So I want to challenge you to kind of flip the script and really think differently about business expenses and how to know how much revenue your business needs to make in order to survive, in order to even exist. So where we're going to start is kind of a personal finance basic, which is the concept of paying yourself first. And in personal finance, what people refer to, what they use to describe this concept of paying yourself first is generally saving for retirement or your other goals. So a really common thing is when you're a W-2 employee, you might have automatic payroll deductions like a 401k retirement plan, a health savings account, things like that, where that money is coming out of your paycheck and you don't even get to see it, doesn't hit your checking account, so you don't even have a chance to spend it. And it's going towards your other financial goals like retirement. And that's a really great, powerful way to automate your savings to set yourself up for success in your future. And so even though you're self-employed and you may not have something set up like that, like an automatic, payroll deduction, you can put these systems in place to pay yourself first. And then I just really want everyone to work on this conceptual idea of what would it be like from my business to be able to bring home money to my family every month to cover our living expenses, keep a roof over our head, pay for groceries, enjoy all the things we enjoy every month. And this is built into the business plan from the beginning. This is the expectation from day one, is that we're going to be able to afford everything that we want to afford. And so I really want to challenge you and encourage you to dream big in this arena and really convince yourself that it's possible to be paying yourself from your business in the first month, if not definitely in the first year. And I think so many people start a business or take their business full time because they're looking for more freedom. They're more autonomy in their day-to-day life. And that's great in the beginning that you can want that. But when your business is barely making a profit and you are scraping by to make ends meet, do you have more freedom? Or are you just as stressed, or if not more stressed, than you were in your previous job trying to make ends meet? And I think it's really common when someone's starting a business, they'll tell you, you probably won't make a profit in your first year, maybe the first 2 or 3 years, but you just probably won't, because most businesses don't. And so even though that might be the statistical reality for a lot of people, that doesn't have to be you. So the very first step here is I want you all to say it with me right here, right now. We've got 4.5 months left in the year. You can have a profitable business this year. So convince yourself and commit to it. So here's another personal finance essential that is pertinent to the survival of a business as well. It's the concept of the emergency fund. And I think the pandemic really helped us realize how many businesses, even extremely large ones, didn't have the cash reserves in place for the emergency that happened, which was maybe a shutdown or a massive reduction in revenue. And so many businesses had to either close their doors or file for bankruptcy, even after being closed for maybe 3 to 4 weeks. So this is super important that you set aside this emergency fund, one, for your personal living expenses, and two, for the business expenses. So you need both. You need to make sure that you can pay your personal rent, your housing, your mortgage, and your business rent or lease if you have one. You have to be able to pay your groceries. You have to keep, all of your essentials. You have to be able to pay for them. If something happens, you need to have the reserve that, right? So I recommend minimum of 3 months. Up to 12 months could be more realistic for you. This depends on your risk tolerance. If you are someone that can easily rebound from something and shift and pivot and say, okay, this isn't working anymore, I can't make money doing this right now, so I'm going to go get another job or do something else, you might feel more comfortable just only having 3 months set aside. But if you're someone that has, a large family you're caring for, or a little less less tolerant to volatility, you might want a larger chunk of cash sitting around. And where do you want to park this money? You want to put it in a savings account that's at least earning some interest. And I say a designated savings account because you don't want to easily tap into this. You don't want it in your personal checking or your business checking account where you could easily just spend it. You want it somewhere where it's separate, that you can only tap into it if it's an emergency. So decide for yourself what's an emergency. If you share finances with a spouse or anyone else, talk amongst yourselves and decide right now what makes something an emergency. And if you really do have to tap into it, make sure that you recover quickly and buff up that account again so that 3 to 12 months is always there. So if you're profitable, which you're all going to be, we've already determined that for this year. So if your business makes a profit and you're paying yourself from it, you will owe tax. You will have a tax liability. And that's not a bad thing, right? People will complain like, oh, I owed so much tax this year. Well, that means you made a lot of money. So there are certainly tax strategies out there and they're worth pursuing. But at the end of the day, you're going to pay tax and we need to figure out how much and you need to set it aside. That's the most important thing. So we're going to go through some kind of tax basics here. And there's a lot of information on this slide, but try not to get daunted. You've got the slides there for you to download, so you can open them up now on your screen if you want to look at it in a little more detail, or save it down for future reference. So a few different kinds of taxes exist, and what you're subject to and how much is going to vary based on how much money you make and the tax entity that you are. I'm going to assume that most of you out there are probably an LLC or sole proprietor. I'm not going to get into the legal side today, but that's mostly what we're going to talk about, is if you're one of those two entities. If you are a corporation, an S corporation or C corporation or a partnership, you will have different requirements, different taxes that you might pay in varying amounts. So be sure to talk to a tax professional to figure out what entity are you and what are your filing requirements. So first, you're going to have your federal income tax. Most people are aware of this. So our federal tax system in the US is a tiered bracketed system. So individual tax rates run from 10 to 37%. So where you'll fall in that, you'll need to figure out. And it's tiered in that the first 10,000, and I'm rounding up, say 10,000 is at 10%, and then the next chunk is at the next bracket. So a tax liability is a very challenging thing to come up with. There's so many moving parts in a tax calculation, and you don't need to become the expert on it, but you need to know roughly how much you need to set aside from your business so that you're not scrambling at the end of the year or early next year trying to come up with a payment. So federal tax is going to be between 10 and 37%. I've got the link here of how to make your payments online. On my website, I have a video walking you through how to make your tax payment online. So it's antoracpa.com/resources. I'll be making another one for the state in a few weeks, so keep an eye out for that. So your state income tax in Colorado, we're a flat tax rate of 4.63%. That is calculated based on your federal taxable income. So here's a really important one to be aware of, is this concept of self-employment tax, also referred to as FICA taxes, also referred to as payroll tax, And I know it's complex, it's got multiple names like this, but this is essentially your Social Security and Medicare tax. When you're a W-2 employee, you as the employee pay half of this. So you pay this 6.2% Social Security and 1.45% of Medicare. It's withheld from your paycheck, so you might not even know that it's happening. And your employer pays the other half. So guess what? When you're self-employed, you are both the employee and the employer. So this means you pay all of this. So this in total is 15.3% tax. That is charged on your profit from your business. And that is in addition to this federal income tax and state income tax. So if you're with me doing some quick math in your head, it's 15 here, at least another 10 here, and almost 5 here, right? That's 30% right there. And it may be quite a bit higher. So I can't advise you because, right, I don't know what your tax bracket is going to be, but minimum set aside 15%, 20, 30% as your income grows. Work with a tax professional to get a tax plan done for you quarterly so you know exactly how much you should be paying in. So quarterly estimated tax payments are due. Here are the 4 due dates: April 15th, June 15th, September 15th, and January 15th. So September 15th is right around the corner. So if you've had profit this year, or if you will by the end of this month, definitely check in with someone to see how much you should be paying for this 3rd quarter payment. I'm checking the chat. I don't see any questions yet, but Hannah, if you see any pop up, feel free to interrupt me.
Great. Yeah, there are a couple that have come through. There was a good one, and if you're going to get into this later, we can hold them, but there was a good one from Jamie asking if, she says, do I put myself on the payroll or do I pay myself out of monthly profits?
So this depends on the kind of tax entity that you are. If you are starting as an LLC or a sole proprietor, generally you can just pay yourself from the profits. You can just take them from the business as you need them. As you grow, if you're a corporation, an S corporation, it is a requirement that you are on payroll and you're paying yourself a salary and issuing yourself a W-2 every year. So at the beginning phases, you can just take the money as you need it, and then as you grow into an S corporation, definitely you need to be on payroll, paying yourself a paycheck.
Great, thank you. Another one that came up, what category in QuickBooks do you put a grant you received? Also, what category do you put a capital loan under in QuickBooks?
So grants, as far as I understand, are not taxable, and so you do not need to report it as income. But I'm also seeing some information that the expenses that you pay from the grant are then not tax deductible. So you'll want to really clearly label it in your QuickBooks of that it was a grant and then it's not taxable. So maybe get a consultation with me. We can look at it a little bit deeper, or talk to your CPA and see where it should go. But you'll really want to clearly label the expenses that you've used with that grant money to make sure that they don't get deducted on your tax return. And then I think that second question was on, was that a loan? Can you repeat that second part, Hannah?
Yeah, on a capital loan.
Okay. Yeah, so loans you will want to put on your balance sheet as a liability. And we will be talking a little bit more about financial reports towards the end. So we'll talk about where that goes in just a few minutes.
Great, thank you for that. There was just one more for questions that have come in so far. about the state income tax. Do you pay those quarterly?
Yes. So state income tax, just like federal income tax, is quarterly. It's the same due dates here. And the link to pay those online is here. It's colorado.gov/revenue online. And I will be making a video how to do that. So if you follow me on my Facebook page or LinkedIn, I'll be posting that video so everyone can see that in a few weeks.
Great, thanks, Lauren. Those are all our questions for now.
Okay. So moving on from the tax side a little bit. So I'm going to use a word that a lot of people don't like, and that word is budget. That word is so dirty and negative to a lot of people, because budget is associated with restriction. Like, oh, I'm on a budget. It sounds like, oh, I'm on a diet. I can't have that. And I wanted to really challenge that way of thinking. So I use a different term sometimes. I'll say managing spending, or controlling costs, or call it a spending plan rather than a budget, just kind of help the negative mindset around it. But I think being on a budget and really having control over what's coming in and what's going out is freeing. When you're not stressing so much over, oh, I can't afford to pay this, or what if my card gets declined the next time I go to buy something? That's extremely stressful. So having an eye on it all and knowing confidently that you're going to be okay to pay what you need to this month and next month, that's empowering and freeing. So let's talk about how to create a budget for your business. So I get to teach financial literacy to a wide range of individuals. I've worked with kindergartners through young adults out of high school. And one of the foundational things that we work with kindergartners on is the idea of wants versus needs. So we'll do this exercise, we'll show different pictures, right? Here's a glass of water, here's a toy. A 5-year-old can very easily distinguish what is a want and what is a need. As we get older, the lines start to blur a little bit. I think it gets harder for us because we convince ourselves that we need things. And part of that is that we've been bombarded with advertisements our whole life of these messages telling us that we do need these things. And we have to reconcile that now. We have to really segregate the two. And we need to really have an understanding of what do we need? What is essential for our business to be in existence or to grow to the extent that we need it this year? And I really love the idea of a lean startup. I don't think most businesses need a large amount of capital or really anything. I know really most, especially a service business, you don't need a long list of expenses and fixed assets and all kinds of things to get going. And that depends on your industry, of course. If you're in manufacturing or something, you might need to buy costly equipment. But, I think the pandemic has certainly shown most of us can work from home very easily. So not spending money on expenses before we really analyze if there's an alternative is going to save us a lot of stress and, of course, money. So when you're starting to look at your business expenses, the first question I want you to ask yourself is, how can I get it for free? And Google it. How do I get a computer for free? Or, anything that you might need. See if you can get it for free. Can you borrow it? Even this costly equipment, before you invest in it, can you borrow it from someone or rent it to make sure that you like it before you purchase it? Or is there a less expensive alternative? There is certainly an aspect of you get what you pay for. So in the beginning, if you're using something for free or very, very cheap, it's probably not going to be the best. No, but it might be good enough. to at least let the business grow until you're making more revenue, and then you can invest in higher costs. So be sure to research and get multiple quotes. If you get a quote for insurance or anything really, get multiple quotes at different deductible levels, talk to different providers. There's so many available options out there. And then see if you can negotiate. That's something that we don't really do as much anymore in our culture. Maybe it's a little taboo, but if you're an entrepreneur, you're bold, you're gonna have to be. So say something is like an annual cost and you don't really have it, have all that money there right now. See if they can put you on a monthly or quarterly payment plan. You don't want to pay a lot of interest on that or anything, but if they're just like, oh yeah, if you can break it into 4 quarterly payments, that would be fine. And I think businesses are, especially now, very sensitive to that because a lot of businesses are struggling. So you may be able to negotiate something like that. Or if you do have the money available to pay upfront for the year, so say something is a monthly cost, it's $50 a month. What if you negotiate and say, hey, if I pay you this in full right now, could I get a 10% discount? And see what they'll do. Why not? It never hurts to ask, right? So this handout is in the PDF, and I kind of want to go through it. This is going to be how to build your business budget by paying yourself first. And we're going to kind of reverse engineer how much revenue you need to be bringing in each month. So first, we're going to start with the amount of pay that you need. I'm also going to refer to this as profit because that's what you're going to be living off of. So we're going to have 2 different columns here. First is going to be the lean estimate. This is going to be bare bones. What is the minimum that you can live off of, the minimum that the business needs to be in business this month? We're going to grow from there, but this first column is just bare bones. Second column is where I really want you to dream. I really want you to get creative and think about what your life could be from this business. And so let's go through some examples. So the first one's going to be your pay and your profit. So in the beginning phases of the business, you may need to go lean on your living expenses. So you may need to cut back on groceries, dining out, all that kind of stuff, maybe cut the cable for a few months, whatever that is. What's bare bones to feed each other and your family? And then savings goals, let's not forget about this. If you know there's something major coming up that you're going to have to pay for, it needs to go in the budget. And this could be something as simple as the holidays are in a few months, so you need a couple $100 sitting around for gifts for the family. As you're dreaming, ramp this up. What kind of living expenses do you want to have? What do you want to afford? And I really want you to build in your retirement savings into this. So 401k, any kind of IRA, health savings accounts, college savings for your kids, vacations, anything. So, and don't just put like $10,000. Just don't randomly put numbers here. Really think through it and see what goals and what you need to save for. So these are going to go in those 2 items here. So then, most importantly, the income taxes. Because if you have profit, you owe tax, no question. And so this is an overly simplistic estimation for the taxes, but it might get you close. So minimum is going to be at 15.3% for the self-employment tax, whatever your marginal tax bracket is, and then our state income tax is 4.63%. So total these up, multiply it by this line above. If your living expenses are going to be higher, then your taxes are going to be higher. So then next we'll budget for fixed expenses. And fixed expenses are just the ones that are constant each month. They say roughly the same, $50 a month, whatever that is. If it's an annual cost, divided by 12 so we can budget it monthly. Insurance is not one that you can forego for very long. I highly recommend you getting at least a general liability insurance, if not more coverage from the very beginning of being in business. Your rent and lease is probably something you can do without, like we just said, work from home for a while. But if later on you want to afford a big fancy office, please budget for it. Any monthly subscriptions, if you do have a loan or you're going to take one, be sure to put the loan payments in the budget to make sure that you're paying for those. And then lastly is variable expenses, which this list could be a mile long. That's your business materials, meals, entertainment if you're taking out clients, your marketing, advertising, training. Employees could either be fixed or variable depending on if they're salary or hourly. And that's a very big decision to make, to invest in hiring someone. It's going to be a lot harder to let them go if you can't afford them anymore. So be sure to make sure that they fit in the budget before you have to make that really tough decision of letting someone go. So again, this bare bones lean estimate for the first month or so, and then later on, a few years down the line, what do you want to afford? Fancy business retreats, really good education for yourself and your team, all that. Put it in here. So then we're going to total all this up. That'll be so the total of expenses, taxes, and your own pay and profit. That's going to tell us the amount of revenue that the business needs to make for in each case, right? That's the total gross amount of money that the business needs to make. So from there, you can figure out, divide it by the cost of your service or your product, how many clients or customers or sales do we need to have each month to reach this amount of revenue. So in a way, we're kind of calculating our break-even point, but it's even better than your traditional break-even calculation because we're already paying ourselves. We're already being profitable and covering the taxes. So this is just an even better way to look at it rather than selling yourself short and saying, let's break even this year. That means zero profit. Why would we want that? We definitely want some profit. So before I go on, Hannah, I'm going to see if there's any other questions at the moment.
Yes, there was one question that came in regards to the budget. Bridget asks, what about cost of goods sold and contract labor? Where would those fit in?
Sure. So cost of goods sold are, I mean, they're variable expenses because you're varying how many you're going to have to sell, right? So if you're creating a product and you have you have variable expenses because of the amount you're selling is variable. I call it variable expense. If you do think it's fixed because you've got a set, so say if you have a minimum order you have to meet, you could call it fixed. But either way, this is all really simplistic in how I've bunched it here. When you're doing this on your own, I recommend creating a spreadsheet like in Excel and actually having a line item for each of these things. Contract labor would be variable because they're not going to be, you're not going to tell them how many hours to work every week. They kind of more or less get to pick their own hours. So that's definitely variable. But yeah, be sure to list all of these expenses out line by line so you can see where those go.
Great, thank you. Those are all our questions for now.
All right. So now I'll touch on the more traditional side of accounting. And like I said at the beginning, it has its flaws, a traditional accounting system, but it's absolutely pertinent. You all have to have these records. So Imagine a scenario in which you are going to a bank because you need a loan for your business, or say you are doing well and you want to bring on an investor to keep growing, or say you want to buy a house or refinance your mortgage, and the bank asks you for your profit and loss statement and your balance sheet, and you look at them with a blank stare because you don't know what those things are. So that would be bad. So you definitely need to be familiar with these statements. So your profit and loss, really commonly known as your P&L statement or income statement, and that's just that. It shows your revenue, so the total number of sales that the business is bringing in. Next is going to be that cost of goods sold, so direct costs that related to the products that were sold. Then all the other operating expenses that we just talked about, that equals your net profit or the loss. And this is the statements that's used to calculate your tax liability. So a tax return is basically a profit and loss statement. So you definitely need to have this. Your balance sheet is essentially what you own minus what you owe. So what you own, those are your assets. That's going to be cash in the bank, so your checking accounts, cash on hand if you have a cash register, any other business assets that you own, computers, any kind of equipment, maybe a business vehicle, all those kinds of things are your assets. Assets net with depreciation. So when you have an asset, every year we get to take a little bit of the expense as depreciation because you're going to use it for many years, so we get to take a little bit of it every year until we've deducted all of that total cost. So then the asset will net to zero. So say you bought a $5,000 piece of equipment, every year we'll take $1,000 of it, and then by the end of it on the balance sheet it's worth $0. And then your liabilities are what you owe. So that's credit cards, that's payroll liabilities. If you are on payroll, if you have employees on payroll, you're withholding their taxes, and then you have to pay it to the IRS and the state. So if you're holding that money, that's a liability. And same thing with sales tax. So that's another one to remember. If you're selling a product, make sure to see if you have sales tax filing requirements. And so back to that question in the beginning of where capital loan would go, it's on this form as a liability. And so for good record keeping, nice and automated and easy, the one I recommend is QuickBooks Online. I think it's user friendly, and I like that we can automate it. So what's a good way to do it is syncing with your business bank account. So depending where you're at in the business, so once you establish a business name, set up an LLC or a corporation, then you can go to the IRS and request an employer identification number. That's an EIN. That's basically a business's social security number. Once you have that, you can open a business bank account, and I highly recommend this. You don't want to intermingle your personal expenses or personal income and business income and expenses. They need to be in separate accounts. So with the software like QuickBooks Online, you will integrate the business bank account, and so all the income and expenses going in and out of that account will be nice and automatically imported into QuickBooks. And then on a monthly or quarterly basis, someone needs to go in and kind of clean it up. QuickBooks will guess what an expense is based on where you spent it. If it looks like a restaurant, it'll categorize it as a meal. But someone needs to go in and make sure that everything gets categorized correctly. And then the next month, when the monthly bank statement comes out, someone will do it again, and that process is called reconciliation. So you're going to reconcile what's in QuickBooks to the bank statement. So in the essence of cost, because I'm promoting low cost, at least in the very beginning phases of your business, you could use something like an Excel spreadsheet. You could go back through your business bank accounts and compile all of the deposits. We'll call those revenue, list out all the expenses by category. That'll take more work, obviously, but if you want to save the $15 to $20 a month that QuickBooks costs, then you could do something like that for at least a little while. But be sure to remember, if you are looking to buy a house, refinance, anything that you would need financing for, they're going to want to see legitimate financial statements. So just be cognizant of that. And then last note on the record keeping side, so receipts, you do not need a shoebox full of receipts. In fact, please don't. Establish a really clean, organized system to get electronic copies of your receipts. So the QuickBooks Online has an app that you can snap a picture of the receipt. If something's like a business meal, I like to just write on there who I was with and what we talked about, snap a picture of it, it gets stored in QuickBooks, and you can crumple it up and throw it away. Or if you just scan it, if you've got a scanner at home, scan it and save it on your desktop. Same thing with mileage logs. All of your business mileage, you want in a nice, clean, easy format. If you haven't done this yet this year, because we haven't been driving all that much, and maybe you're trying to drive a little bit more now that things are reopening, just create a log of the date, where you were going, who you met with, what was the business purpose, and what was your round trip mileage, and have that nice and tallied up for when it comes for tax time. And the reason you want to have these backup information is, in the worst case, if you ever got audited, they would ask for all of these reports, all the receipts, all the invoices, mileage logs. They may want to look at your calendar of who you were meeting with, so you'll want it nice and organized. So that's just an inconvenience rather than a catastrophe. And then I wanted to talk about some roles of accounting professionals, because the name accountant is a pretty broad definition, and it can mean many different things based on what that person does and what their skill set is. So a tax preparer most commonly is a CPA, that stands for Certified Public Accountant. Another common designation is EA, which means Enrolled Agent. I highly recommend finding a tax preparer that's either of these designations. And this just means that they've been recognized by the IRS as someone that's qualified to prepare taxes. There are other people out there that do prepare taxes, but it's good to know there's a weeding out process. Make sure they have basic education and systems in place to actually prepare taxes. So that's what they do. And then you also want to look for someone that does tax planning and consulting throughout the year, so that you can get your questions answered. You know, self-preparing software like TurboTax and things, there's a place for them, and it can be more cost efficient in the beginning, but it's something I recommend investing in within the first year or two, is getting a good tax accountant on your team, so that you can make sure that you're really on track with paying those taxes, and you're not ending up with a huge amount due every year and racking up tax debt and everything. So enough about us. A bookkeeper is more on the transactional side. So when we were talking about QuickBooks just a minute ago, and that monthly reconciliation process, that could be something that a bookkeeper would do. Bookkeeper might also do sales tax returns, may also do payroll, or there's also dedicated payroll professionals. At a lot of larger businesses, you have like a CFO, that's your chief financial officer, or a controller. And this would be an internal position where you're hiring someone to oversee the accounting and financial reporting. And then an auditor is someone that's deep diving into the financial records, and they're looking for misinformation. They're looking to make sure that everything was reported accurately. So most commonly you'll have auditors from the IRS or the state. There's also auditors of public companies. They audit financial statements so that we're trading stocks on this, so they want to make sure that these companies are reporting accurate financial data. So, get yourself together a good team of financial professionals. Financial advisor is someone who can help you on the investment side if you need it, helping you get a 401k or other retirement plan set up. I recommend doing that in the early stages as well to make sure that you're saving for your future. There's a lot of great people out there to help you in the growth of the business and in the growth of your wealth. And some resources I wanted to share. These are also listed on the handouts page at the bottom. There's a really great book called Profit First, which is pretty similar to the concept we looked at today, but he's got a more holistic system that you can implement. That book's Profit First by Mike Michalowicz. If you're an audiobook person, his audiobook is pretty good too because he narrates it. And see if you can get this one for free. If you're a library person, either check out the book for free or get the audiobook from one of the library apps like Hoopla. And then if you're a podcast person, I like this one called Rebel Entrepreneur. I listened to an episode this morning about 5 ways to start a business without any debt. So I like that one, just kind of challenge the idea of high expense, costly businesses and just creating business pretty much out of thin air. So check out those resources and see if any of those speak to you in a more profound way. And like I said, I've got a website of my own, so check that out. I write a blog. It's mostly personal finance stuff. I sprinkle in some tax strategy occasionally too, so check that out. And like I said, I've got some videos and other resources on my website. So that's all of the content I had, Hannah. So we do have a few more minutes for questions if anything else has popped up.
Great. Oh, here comes one from Susan. She asks, where do we track donated services or time?
So donated and what's the word I'm looking for, like bartered are different things. So if someone donates it, I do not believe there's a tax impact, so I don't think that you need to track within your QuickBooks of a donated item. If it's like a large fixed asset, I wouldn't put it on your balance sheet or anything because you didn't pay for it. So I don't think donation is something that needs to be tracked. If you are a nonprofit, may be different, so you can get in touch with me or one of the other consultants to talk about this. But when you barter for something, as in you're exchanging services, so for example, I need an office space and I don't have one, so I'm gonna ask my buddy, he's got an extra room in his office, he's gonna give me it for free, but he doesn't want it for free, so I'm gonna build his website. I've got good digital marketing skills or something, so I'm gonna make him a website for free and he's gonna give me office space for free. So you're not changing dollars, but you're exchanging services or goods. So I'm a big proponent of this because you can get stuff for free, right? I recommend it, and think about that. What is your skill set? What do you have of value that you can offer someone to get what you want at a low cost? But in this instance, this is actually a taxable exchange, because in the eyes of the IRS, you are still exchanging goods and services in the equivalent of a monetary value. So if you are doing this, you want to basically mark it as you've received the income. So how much would you charge to create someone a website? And you need to report that as income on your income tax. But then on the other side, you can't really deduct the expense of the office space because you didn't get to pay for it. You didn't actually pay the expense. So you have to record what you would have brought in, for example, for the service that you offered, but you can't deduct the free thing that you got. So it's a little bit tricky there, but again, talk to one of the consultants. And so my calendar, you can contact one of us at the SBDC and get some time on my calendar. It'll be filling up here probably through October. So if you want some time with me, you can get a free consultation with me at the SBDC. Do that here quickly, and we'll get some time and get your questions answered on a more personal level. And remember that we have so many other free resources and experts on the team. Like marketing could be a really great one to, if you're starting to ask, like, how do I increase my sales? How do I generate more revenue? Talking with any of the marketing experts will be great for that. So, any other questions, Hannah?
Yes, great plug for our SBDC. I'll get some of that contact info at the end too. But a few more questions. One came in from Cami. She's asking if she's required to pay herself immediately, like every quarter or monthly, etc., or if she can choose to reinvest profits in the business initially.
Yeah, absolutely. You are not required to pay yourself. If you don't need it, you don't have to. So you can reinvest in the business. You can leave money in the business, and this can look in the form of that emergency fund that we talked about in the beginning. It's just saving cash reserves in a business savings account, so it's there for the rainy day. Or it could be, I'm going to leave it for next year, and then I'm going to buy more expenses or equipment. So yes, you can absolutely just invest in the business and leave it there. But remember that if it was business profit, which it would be if it's left over after expenses, you do owe tax on it. So make sure that you've still got that amount set aside, at least the 15 to 30% tax on that amount set aside and paid in for taxes.
Great, thank you. A question about mileage. Do you suggest that they track like all mileage for any business related trip, or should it be more limited? Couple examples, if they were to go to an office space daily only, do you track that? Or if you're going shopping for a business related purpose, do you track that type of errand? What do you suggest there?
Yep, good questions. Thanks for the examples there. So the IRS does not want to give business owners preferential treatment over W-2 employees. So your business expenses that are deductible are above and beyond what someone would have as a normal employee. So the example there is your daily commute. If you're going back and forth to an office every day, that is not deductible because everyone has to do that. And a normal employee doesn't get to deduct it, so neither do you. So what you do need to track is the above and beyond business expenses or in mileage. So if you're going to buy supplies or equipment, if you're going to a business meal, meet a client, if you are traveling to see a client or to go to a conference or something, all of these kinds of things are deductible mileage that you want to track. And then, so you want a list of both. You want to know what was your total mileage on the vehicle for the full year. And this you don't have to track on a granular level. You could just mark it once in January and December and then see what your total mileage was for the year. Or, you know, when you get your oil changes every so often, just know what the total mileage was for that vehicle. But then you want the granular level tracking of those business trips in the vehicle, and then that total for those meals and meetings and those kinds of things.
Great, thanks for clearing that up. Last question that came in, do you have a resource you recommend to learn about sales tax?
Sales tax is tricky. So here in Colorado, the state puts on some, I know they were putting on in-person classes, and I'm sure they're doing them virtually now. So I would go onto the Colorado Department of Revenue website and see what kind of webinars they might have. I know they do have at least some training videos on there, but I know of a local bookkeeping company that does some training. If you contact me, I can try to get you in touch with them and see if they do sales tax. But I'd say most directly go to the state and then city and or county in which you are doing business to get answers directly from them to what jurisdictions you will owe sales tax.
Perfect. Great. Well, these have been some really great questions and really helpful material. So thank you for putting this all together, and thank you to everyone who joined us. Lauren's contact information is up there on the screen there. And if you would like to make an appointment with any of our consultants or check out any of those other free resources she mentioned from our website, you can go there. It's northmetrosbdc.com. So yeah, any questions, head over there. And anything else, Lauren, you want to add?
I think that's it. I'm excited for you all, wherever you're at on your journey in either just starting a business or if you've got one that you are transforming. I really encourage you all to be profitable this year and reach out. There's so many people here to support you in the local community and beyond. So get the support and keep rocking that business. So thanks for having me, Hannah.
Great. Thanks, Lauren, and thank you, everyone. Have a good rest of your evening.